Hello everyone and welcome to CryptoRed, the channel for all the latest crypto news. Today we're going to talk about the price action in cryptocurrencies, but also Donald Trump who's doing something pretty wild, an outright attack on the Federal Reserve. We'll also cover a major update to MetaMask that made things simpler. And yes, Google has just announced its own blockchain, Layer 1. We'll talk about that in a minute. We'll also talk about the US and many other topics. Let's start with the prices. Bitcoin is trading around $110,000, $111,000. Ethereum is at $4,600, up almost 4%. Solana is above $200, up 7%. Now let's begin with the market manipulation. There's been a manipulation episode on Hyperliquid in the perpetual contracts market, not on spot, because the two tokens involved aren't even available in spot markets. The first is XPL, the token of Plasma, the blockchain associated with Tether. The second is World Liberty Financial. Both saw massive spike, huge green candles, and then quickly dropped down. So what happened? Someone, maybe even an entity linked to Justin Sun, according to some people, though I haven't found reliable proof of that yet, started massively buying XPL. They pushed the price all the way up to more than $1.50. Then it was sitting a few minutes later at $0.6. That sudden move liquidated the huge number of short positions. People who were shorting XPL ended up losing millions of dollars. Here's the background. Those who got XPL during the ICO can't actually sell these tokens yet on the spot market, but they can short it. That way they lock in guaranteed profit because they can hedge the value of their allocation. But the catch is whenever you short, even at 1x leverage, you can get liquidated if the price suddenly explodes upward. And that's exactly what happened here. So once again, it shows the risk. Even if you're just shorting at 1x, you're not safe. The only position without liquidation risk is holding spot. Just owning the tokens directly with no leverage. Sure, they can go down to zero, but you won't get forcibly liquidated. With everything else, margin leverage and derivatives, there's also that risk of liquidation. If price moves too fast, you can be liquidated. Honestly, my advice is stay away from leverage. Now let's switch to Donald Trump. He's openly going after the Fed. He's just fired the Fed governor, Lisa Cook, out of nowhere. She was dismissed. The official reason, allegedly lying twice within a 2-week span about her mortgage application. Trump said this kind of dishonesty is unacceptable and deserves termination. But of course, this firing isn't just about that. Lisa Cook is expected to fight back legally, and she might even get the dismissal blocked in court until a final decision is made. The real question is, why is Trump doing this? Well, it's pretty clear. He wants to bring down the Fed's benchmark interest rate, but he can't just fire Jerome Powell directly. Jerome Powell, he can't be fired until May 2016. Then he will be changed with another director, another chairman. So here's something I only just learned. I used to think Jerome Powell had far more power than the other governors. That as a Fed chair, he could single-handedly decide on rate cuts. And I thought if Trump couldn't fire him, it meant he had no way to force cuts. But that's not exactly how it works. It's a little bit more complicated than that. In reality, there are 12 people who vote on whether to cut or raise the Fed's interest rate during the FOMC meetings. Out of these 12, 7 are governors of the Federal Reserve. The 7 governors are appointed, and if Donald Trump fires one, he can replace them with someone of his choosing. Then there's the president of the New York Fed, that's a permanent voting member, and on top of that, you have 4 other members who come from the regional Federal Reserve Bank across the US, and these 4 rotate in and out. So what does this mean? If Donald Trump managed to gain a majority, or better yet, if all 7 Fed governors vote the way he wants, he could effectively steer decisions on interest rates. Jerome Powell votes count like just any other governor. And if just one vote of as one vote of like the 12 others. So simply replacing Powell wouldn't by itself change the Fed's direction. But if Trump's managed to influence the 7 governors by firing some and appointing people loyal to him, then yes, that could have a direct impact on rate cuts. And let's be clear. A cut in interest rate is seen as very positive news for crypto and for risk assets in general. Powell's terms end in 2026, and between now and then, if Trump appoints people like other governors, well, he could really shift the balance of power inside the Fed. On top of that, it also kind of threats to the remaining members, essentially saying, if you don't vote the way I want, if you don't cut rates, I'll fire you, just like I've done before. That's a heavy-handed tactic and honestly not very democratic. We'll see how the courts react to this, but it really shows how far Trump is willing to go to force the rate cuts because he wants to revive the economy, at least from his perspective. The irony is that now both stock markets and crypto markets are near all-time high, but Trump is tired of this high interest rate. It could have an impact on the job market, so he wants this to change really quickly. Trump's want to push things much further than the Fed's current projected cuts in September and December. He's even talked about 3% rate cuts, which is absolutely massive. Personally, I think the Fed will move more cautiously, but if there's a major shakeup at the top, it could accelerate the process. So that's what's happening right now in the US with the Fed, Trump, and what really looks like an attack on this institution. Now let's switch gears and talk about MetaMask because they've just rolled out a very interesting feature. The idea is always the same: improve user experience. But to do that, you have to slightly lower the security barrier. Unfortunately, you can't maximize security and user friendliness at the same time. So MetaMask has come up with the kind of middle ground. They're calling it MetaMask Social Login. Now, when you create a new account on MetaMask, you'll have the option to log in using Google or Apple. At first glance, that might sound insecure, but here's the important part. Even if someone hacks your Google account, they still won't be able to access your MetaMask wallet. Why? Because MetaMask will also require you to set up a password in addition to linking your Google or Apple account. That password, in a way, replaces the seed phrase. And unlike a 24-word seed phrase, which is nearly impossible to memorize, a password is much easier to remember. So even if someone gains control of your Google account, they won't be able to get into your wallet without that password. Of course, if you use a weak password, you're still vulnerable. Someone could try to guess it. So yes, you still need to pick a strong password. But overall, it's an interesting compromise. A lot of people struggle to securely store their seed phrase, and this solution helps lower that barrier while still maintaining a decent level of security. Right now, what we're seeing is more of an intermediate solution, something that can actually reassure certain people. They can say, oh, I've got a password, I know well, it's long, it's complicated, I'm sure I won't forget it, and then I can log in with Google. That way, I know I won't lose access to my account if something happens, if my key burns, if I lose my seed phrase, or if I get locked out for some reason or another. This is new. Until now, MetaMask didn't have this kind of native solution, so it's a good sign they're trying to bring new options. And honestly, it's always good to let the user choose. Some people want to create their own seed phrase, some want to connect a ledger, others prefer social login. Having multiple different solutions is very valuable because there is no single best option. The right option is the one that matches the person's need, the risk they're willing to take, and their technical skill level. Now let's talk about Google. Honestly, it's pretty wild. They've just announced a new blockchain. The project had been mentioned before, but not really framed as a layer 1 blockchain. They're calling it the Google Cloud Universal Ledger. And just now in LinkedIn post, Richard Widman, the head of Web3 strategy at Google Cloud, presented GCUL as a true layer 1 blockchain designed for institutions, especially in financial services. They want to position themselves as high-performance neutral platform that interestingly supports smart contracts in Python, which is pretty rare. They're really trying to differentiate themselves from Circle or from Stripe's new blockchain initiative, saying, "Look, we're neutral." For instance, Tether could come and launch USDT on us, something that realistically wouldn't happen on Circle's own blockchain. So they're pitching themselves as this neutral intermediary for financial services. But here's the catch. We don't have any details about how decentralized this layer 1 actually is. In fact, they already admitted it's going to be permissioned. It will be private permissioned, meaning you need Google's approval to become a validator or even send some transaction. For me, that doesn't qualify as a real L1, a real blockchain. That's just a private blockchain, and we already have a ton of those. What Google is doing here feels more like surfing the blockchain hype. In fact, I saw some chatter recently about the European Central Bank considering launching the digital euro on Solana or Ethereum. And it's better if you're going to issue a token. It's better to issue it on a public chain. Those blockchain already exist; they're battle tested, and it makes way more sense to build on them than reinvent the wheel. On top of that, so there are some other news, mostly marketing news. The US Secretary of Commerce just announced to Donald Trump that America's official economic statistics will now be published on the blockchain because, of course, Trump is the crypto president. Realistically, this has no real utility. It's just a statement reusing blockchain in the Trump administration. Trump and his family loves blockchain. They're making billions from it. World Liberty Financial is funneling them a massive amount of money, and their token also will launch soon. So for me, the whole idea of publishing data on the blockchain isn't really something major. There are already other projects doing it very well, like Chainlink. Now let's take a look at Arbitrum and the blockchain that are built on top of it. They're starting to move toward becoming zero-knowledge blockchain. In other words, the zero-knowledge technology is now being adapted on Arbitrum to replace the optimistic technology. This comes from a company called Succinct. I'm not sure how it pronounced it exactly. It partnered with Tandem, a company launched by Off-Chain Labs, the team behind Arbitrum. Together, they're working on developing zero-knowledge technology and adapting it for different blockchain built on Arbitrum. You should know that by default, Arbitrum and most optimistic blockchain, if you want to withdraw funds, you have to wait a few days, 7 days sometimes. That's how the mechanism works. With zero-knowledge proof, though, it can be done in just a few minutes, even a few seconds. And that's coming soon. It's already the case on Optimism. The technology and the tools exist to create zero-knowledge blockchain, but not yet on Arbitrum, and it's really good news for both Succinct and Arbitrum. And finally, stepping away from crypto for a moment, I want to share something I found absolutely incredible. Yesterday, I tested Google's new image generation tool. It's available through Gemini, specifically in Gemini 2.5 Flash, and honestly, it's mind-blowing. You can actually modify people's faces and entire photos without altering the person identity. Before that was impossible. If you tried this on GPT, like uploading a picture of someone and asking it to add a hat, the whole face will change. On Gemini, it actually works. I tested it myself. I took a random selfie, really low quality, and asked it to turn this into a professional LinkedIn CV and put me in a suit and so on, and it did it. The result was a completely realistic image. It can do a lot of other things as well. This is only the beginning. For me, it's a major leap forward in AI. We've had big milestone already, the launch of DALI, that was impressive, the launch of GPT-3, GPT-4. They were all major steps, but now for me, we've crossed a whole new level with image generation. What Google has done is impressive. So that's what I wanted to share today about the latest crypto news and beyond. I hope you enjoyed the content. If you did, don't forget to like, comment, and subscribe. I'll see you tomorrow for the next update. Bye for now.